there's this private credit stuff that has really been pushed as a little bit of this is a different alternative to the stock market, and it's just kind of been pitched much more over the past couple of years.
Yep. Yeah. No. It's kind of the new fad. There's always every couple of years there's something like this, and it's different. It's new. It's exciting. It reminds me of maybe about a year ago when all of the private placements were being pushed on 401ks and that sort of thing. It's always something else, and typically the tried and true is what's best.
Well, and significantly when it comes to private credit, you saw a push into sort of more the retail industry. The push into, hey, we want to have these products be available to investors inside their 401ks, and now, okay, as that popularity spiked, and regular folks, if you will, regular investors got into these types of investments, you're starting to see cracks, particularly as investors are asking for their money back. A lot of these investments are basically limiting the withdrawal, saying, hey, wait a minute, no, you can't get your money back. And some of the biggest names on Wall Street are actually sort of under pressure on this stuff.
Yeah. Well, I mean, people forget that when you're investing in something that's not traded on public markets, liquidity can very quickly become a problem. I mean, typically withdrawals from these types of investments are limited to certain time periods, and it's not if you don't read into it and you just kind of throw your money into it, you can be surprised on the rules.
So let's set the table a little bit on this and talk a little bit about what is private credit. I mean, at its core, private credit is basically lending outside the traditional banking system. So if you need to seek out private credit, right, then the regular bank has probably said, no, we're not going to loan to you. Right. And instead you are seeking a private solution outside of the banking industry.
Yep. Yeah, no, they're lending money to middle market companies, private equity backed firms, niche borrowers, things like that. Investors are promised higher yields, than bonds and less volatility than the overall stock market is essentially the gist of it.
Yeah, I mean, key distinction is because it's private, it doesn't, as you mentioned, doesn't trade on public markets. There's no daily pricing, right, which means that there's no easy exit. And liquidity is limited by design on these products. These products are intended to be able to loan somebody money. Well, you don't want that loan to be callable within the month after the fact.